for the first CP seminar on behalf of our chairperson. Post takeover of the new office bearers, where we will be discussing on the important topic of audit and bridging the expectation gap. As we all know, audit plays a vital role in ensuring the accuracy, reliability of the financial statements, and they are critical for maintaining the trust and confidence among the various stakeholders. Today, we have gathered here to discuss the various expectations that the stakeholders have from audits and how we can bridge those expectations to enhance the effectiveness of the audit process. We'll be discussing the roles of the auditor, the expectation of the management, regulators, investors, and other stakeholders, and how we can work together to ensure that the expectations are met. We have a distinguished speaker, CA Sundaresan sir, and my principal when I was undergoing my articleship training, whom I learned audit and who is expert in this field. And he will provide a valuable insight into this important topic. His experience and knowledge will undoubtedly enrich our understanding of the issues at hand and help us find solution to the challenges facing the audit profession. Your presence and participation are a testament to the importance of this topic, and I'm confident that our discussion will be fruitful and informative. Once again, I welcome you all. Before I hand over to our secretary, let's take this program as a shared commitment to ensure we meet the highest standards of audit quality and expectation of our stakeholders. Over to secretary.
Thank you, Pramod, Vice Chairperson, Bangalore branch. Good evening, esteemed members. I have privilege in introducing today's speaker, CA S Sundaresan sir. Sundaresan sir is a fellow member of Chartered Accountancy. He's a BCom graduate also. He's a retired partner from Deloitte Haskins and Sells LLP. Sundaresan sir has more than 34 years of professional experience. He has handled audit and assurance services of large listed companies as well as SMEs. He has extensive experience in cross-border reporting for multinational companies under IFRS. His experience across a wide spectrum of industries like technology and telecom, FMCG, manufacturing and banking and finance, etc. He was also involved in group audits through global shared services environment. Sundaresan has also rendered other services to clients, including internal audits, control assurance services, SOX compliance, due diligence reviews, valuations, etc. He has been a member of Financial Reporting Review Group of FRRB of the ICAI for past several years. He is a regular speaker on professional forums on accounting, auditing, company law, and corporate governance. With this brief introduction, I present before you CA S Sundaresan sir. Over to you, sir. Thank you.
Welcome.
Thank you, Pramod. Thank you, Manjunath. It's been a great pleasure, and I was just explaining to Pramod, this is one of the few things I keep in touch with the professions. As I retired about a couple of years back, and COVID was in full flow. And these professional lectures and other things on FRRG keeps me alert. And also, I should be thanking the entire branch for providing me an opportunity to share my knowledge. Everyone who I meet, they say you can't let go of your knowledge. You've got so much of experience. You should share it. And I am thankful that this is a forum which I can share whatever little I have learned in 3.5 decades. I can open. Can you see the screen?
PPT is not coming, sir, but we can see.
Share the screen, isn't it? What did I do?
Yeah, share the screen.
Share the screen. Sorry, 1 minute.
There's a green button.
Where is the button?
Green button.
1 minute.
Which
I
says
have
share
to
the
go
screen.
to this. I have to share screen. Okay. It's coming, share. Okay, share. I could see.
Yes, sir.
Yes, sir. Your PPTs are being seen, sir.
Okay. So whenever there is something going wrong, or whenever the regulator finds something missing, they come and question the auditors have not done their duty. So everyone, not only the regulators, we give our reports. I concentrate more on my company audits. That's where there is a lot of focus. Now we give our reports to the shareholders. If you read the reports are addressed to the shareholders. So normally you'll think that you are responsible to the shareholders only, and only the shareholders can tell you or expect you what they can get out of your audit. But unfortunately, the audit is not like that. The financial statements which we report on is being used by a lot of stakeholders, and everyone has their expectations. Okay. And it's phenomenal if you look at it. The regulators, very often we find the regulators expect the auditors to do so many things which may not be part of the audit, but that is their expectation. The regulators over a period, I will come to it later, how in fact participate in every aspect of the audit. They have started regulating the auditing standard, accounting standards, the appointment of auditors, the review of performance of the auditors, and so on and so forth. It's no longer the ICA, we do that. ICA is now more a preparatory body or an advisory body to the government. The government has its own explanation. Apart from the independent regulator, the government itself has got regulators. Very often, classically, the tax authorities come and tell you, oh, this is not in line with the tax law. They don't understand the tax law is different from accounting standards. What could be true for tax? The tax wants all the tax to be paid in advance or as early as possible. Whereas the accounting standard very often defers the accounting of various revenue. So there is always a conflict. They don't need to understand. So now they have got their own tax standards, okay, and tax preparation standards, and then tax accounting standard, they call it. And then they want a compliance in the tax audit report. Financial institutions. The financial institutions give loan. In fact, they expose themselves to the various companies as much or even more than the shareholders or investors themselves. Now, it's their duty to ensure the financial health and how the companies can repay, the review of the projects, and a monitoring, continuous monitoring. But at the same time, they actually pass on a lot of responsibility to the auditors. And over a period, they have been very vociferous in making the government to include certain reporting aspects, which is for their benefit. Okay, just for example, recently the stock statements to be test checked, or repayment of loans to be reported upon, all those kind of things. Okay, so they have their own expectation. And their expectation is sometimes not what the auditor does. They are expecting the company is in good health, and they will, if auditor has given a clean report, the company will continue to do well, and they will keep on, and they will ensure the repayments are made. The auditor doesn't do a futuristic assessment except specifically for going concern assumption. Now, they have brought their requirement indirectly on repayment of loans. So this is actually not the duty of auditors to look into the future. It's not even possible for the auditor to look at the future health or the business aspect of the company. But the expectations are there, perceptions are there. Investors, the investors and mutual funds and small stakeholders have the expectation. This is actually, a lot of them are short term. For instance, all the listed companies, we have got a quarterly review. The quarterly review itself keeps on being reviewed by the statutory auditors. And some of the companies have gone a step ahead and actually do a quarterly audit of their results. Okay, so the investors ensure, wants whatever is the financial results to be completely reliable and based on which they can make the investment decision. Audit committees. Now, the audit committees have an independent role to play in the management or in the financial statements, controls, etc. The audit committee has to interact with the auditors and also oversee whether the auditors are doing their work, and then they interact and also discuss points which may not be discussed with the management or which have been discussed with the management in respect of which certain judgments have been made. Now, there are issues with the audit committee. Very often I have seen audit committees, they will come and tell us, as our auditors, hey, you are our ears and eyes and ears in the company. Now, I used to tell us, we are not the eyes and ears, you are the eyes and ears for us. So there is a quid pro quo as far as audit committee is concerned. They want the auditors to help them out to ensure their duties have been performed. Especially these days, independent directors who form part of the audit committee have an enormous role to play, and their responsibility is even more than the full-time directors. And we find over a period a close interaction between the audit committee and a lot of time being spent with the audit committee and the auditors. Management. The management have got their own expectations. Okay. The management expects the audit to be smooth. The management expects the auditor to be completely knowledgeable as far as their business is concerned. The management expects a continuity in the personnel being sent. The management wants to comply with a very stiff deadlines. And a classic thing which we practically come across, they will provide the data 2 days before the board meeting, and they will expect the audit report to be ready by the board meeting date. So there is a lot of undue pressures or undue expectations from the management also. Professional body, in this case is ICAI. ICAI wants the audit to be done an excellent way. They don't want any failures because it affects the professional credibility. And they want all the auditors to fulfill the auditing and accounting standards, auditing standards and the guidelines which have been issued by them. Okay. Then there is an employees. The employees sometimes want to ensure that as far as they are concerned, their liabilities have been provided for, and there is nothing hidden in the financial statements and all kinds of things. Potential investors. It's not just the investors who are invested in the company. Even the potential investors read the financial statement and they want that the accounting statements which have been reported by the auditors are reliable and based on which they can take the investment decision. Now, the expectations, partly it is expectations and partly it is, I would say it's perception. Okay. Now, there is a big difference between what an auditor does and what he is supposed to do. That's the perception difference. The expectation is that all the auditors verify all the laws, compliance with all the laws. Okay, this is not mandatory. Okay, I'm just putting it as expectation. Just because I have put in here doesn't mean that everything has to be performed. Compliance of all accounting and auditing standards. Yes, this is the auditor's work. Auditors look for frauds all the time and find out all of them. Now, whenever there is a fraud takes place, we find there is a hue and cry that the auditors have not looked at the audit. I'll come to it in detail. We used to study saying that auditors is not a bloodhound, he is only a watchdog, but it's no longer true. The auditing standards have been forced to change because over the period, the investors and others and regulators have questioned the auditors. If the auditors have no responsibility in respect of frauds, why there is an audit? Okay, so because of that, the auditing standards themselves have a separate section on the duties and responsibilities of the auditors. Then the expectation is no revenue leakage or postponement of tax. The tax authorities don't want any revenue leakage or even postponement of revenue. Okay, the accounting standards may actually require the deferring of revenue if certain things are not present, but the tax authorities want that it should be in advance. Okay, they question it. Certify the health of the company. The auditors do not certify the health of the company. They do not look at the business aspects of the company. They do not look at the business is viable in future, except in respect of a limited thing of going concern and certain aspects which are there now in the CARO reporting. Certify that the loans will be repaid. Oh, this is what the banks want. Now, for a long time, they have been telling that it is not possible. Now they have included in the CARO. Personally, I believe no one can certify that in future such and such things will happen. And this is been there for now. And then obviously we need to report. Okay. But this is a big challenge. Future prospects. Now, when the investor looks at it, they actually do not look at much of the financial statement. They look at the future prospects. And based on these financial statements, they expect the auditors, okay, to report on future prospects in some manner or the other, or they want a disclosure in respect of future prospects. That is not part of the financial statement, may not be part of the financial statement, nor the duty of the auditor, but there is an expectation. The interest of investors and smaller shareholders to be protected. Everyone, their interest to be protected by the auditor. Okay. For instance, if there is some things which are being done, whether the smaller shareholders' interest is protected vis-a-vis promoters and the major shareholders. Okay. They expect the auditors to look at those things. Okay. They say you are our representative. Okay. This is a kind of expectation which is there. Uphold the professional reputation. This is from the institute. The institute wants the highest level of quality, highest level of professional independence, integrity, and the auditors uphold the professional reputation, and any audit failure reflects on the professional reputation of the institute in a way. Complete independence. This is over a period. Everyone wants the auditor to be completely independent, meaning there is a lot of demand these days that auditors should not be doing any other work other than an audit. Okay. In fact, Europe, there is a demand, and there is some procedures to form audit-only firms. Okay. There are firms now, they are bifurcating their audit and other practice to the advisory practice. This demand is growing day by day. Okay. And there is a lot of challenge which has happened in this area. This list is only a sample. This list is endless. It keeps on growing. Okay. Is the expectation and perception always correct? May not be. Okay. But there is always a gap between the expectation and the performance of the audit. Now, this gap, what we see as an expectation gap, we can make it in two separate segments. The expectation and perception is the duty of the auditors as per law. Now, auditor's duty is as per the Companies Act, okay, or even in the tax thing, it is as per the tax law. You can say that, okay. Now, it's no longer the institute standards or anything like that. So, audit is per law. We are not discussing internal audit or any other audit here. Now, this is one gap. Is the expectations of perception is as per the duties as per law. Okay, that is one part of the gap. The second part of the gap, duty of the auditors per law versus audit performance. Okay, this is entirely in the domain of the auditors because it has been prescribed by the law, auditing standards, institute guidelines, all those things are law only. Okay, the audit is being performed as per that law. That gap is very, very important. That's growing. Okay. Now, let us look at the first gap. Now, what is the government has, why such, let us understand why such expectations and perceptions, so much of expectations. Actually, the government thinks, many times those who have dealt with the government, they come back and tell, look, the government is expecting a miracle. The government is expecting, if the auditor signs off, there cannot be anything wrong in the financial statement. There cannot be anything wrong with the company. That's the kind of expectations the government has got. Now, why is that expectation? The expectation is, one, auditor is one of the few people who does an independent examination of the financial statements and also controls within an entity. There is no one else does that. The government and the regulator have got their powers, but they don't do a regular examination of those things. The auditor has access to all the relevant information. He has got interaction with the management and the company on a regular basis. For instance, a listed company, every quarter the auditor is there. Okay, so he has got access to the relevant information and the personnel. The auditor is bound by high professional standards. The standards which he follow are international standard. Our auditing standards are ditto the international standard, barring a couple of changes here and there. Otherwise, we are in compliance with international standards. So we are talking about a high benchmark as far as audit is concerned. The auditor is competent and qualified for such work. This is actually what you call is a compliment. At the same time, it is because of this, there is an expectation. They say a chartered accountant is highly competent and is being trained and he is knowledgeable in so many ways. He knows the law, he knows income tax, he knows accounting, he knows auditing, he studies management accounting, he understands the business like nobody else. So he is competent and he is qualified for such work. And that's one. And he has the relevant knowledge and skills. A person who is being appointed as an auditor, there are two things. I supposed to take the audit only if I have got a relevant knowledge and skills. It is actually, people are not aware. If I don't have a relevant knowledge and skill, as per the code of ethics, I am not supposed to take such work. If I am not, I will not be able to perform an effective audit, say some specialized industry. If I don't know anything about the industry, I don't have the relevant skills, I'm not supposed to take those audits. Okay. In the same manner, the companies, when they appoint the auditors, they also look at it. The audit committee has the duty to appoint the auditors after looking at it, whether they have got the relevant knowledge and skills. They ask you to make presentation, they look at your past record, and look at who are the partners, what is the staff, and all those things. In view of all these things, there is a very high expectation and perception as far as an auditor is concerned. It's very nice to know that, but in practice, there are challenges. Okay, there are issues in respect of these exception and the perceptions. Every stakeholder expects the auditor look at from his perspective. Okay, the audit is an independent examination. We understand the financial statements are used by various stakeholders, but we have to look at the financial statement in line with the accounting standards, auditing standards, and all those things which are prescribed by the law, and not essentially from a particular shareholder's point. Okay, that's a challenge. But they expect you to do it. For instance, bankers. The bankers expect as if the auditors is employed by them. We are not employed by the auditors. We don't look at them. We can look at their aspect all the time. So they always demand that, and they have included certain aspects in the additional report on audit, okay, which is of help to them. Audit is not an examination of the business future, except for the limited examination of going concern and certain CARA requirements. But very often, if there is a business failure, they look at it as if it is an audit and accounting failure. It's not. Very often they're not. Business failures, so long as the accounting and audit reflect the position of the company. Okay, for instance, if a company, if it has got the net worth is wiped out and the auditors is reported properly and that company fails, what can the auditor do? Nothing. Because it's already reported. The financial statement reflects the financial status of the company. Okay. The other aspect is the auditor is not a substitute for detailed study and monitoring the financial health and funds by a lender. A lender, when he lends the money, he needs to look at the purpose for which the loan is given. The purpose is whether it is the cash flows will come out of those activities and the repayments will be made out of this activity. The auditor doesn't look at it. But they want the auditors to look at. Now they have included whether the funds have been used for the purpose for which the loans have been given or the public issue has taken place. Now, as if the auditor, for instance, if there are technical aspects on the utilization of the funds, the auditor is supposed to be looking at it. Okay, so that has become a problem. It's a challenge as far as we are concerned. Then as far as the fraud is concerned, auditors' duty is no longer what I will again say, you are no longer a watchdog. We are not a bloodhound. We are only a watchdog, is what we read. But we are no longer that. Duty is expanded. But at the same time, it's not a forensic examination. What's the difference between an audit and forensic examination? A forensic examination is looking at the evidence of a fraud. It suspects a fraud and actually looking at the evidence of the fraud. If I do an audit with a forensic mindset, we can never complete an audit. It involves procedures which is much beyond the audit scope, much beyond the auditing standards. But at the same time, people have, I should mention, people have started using forensic expert in audit, especially in areas of revenue and other methods, to partly or limited forensic examination, which they've started. It is not part of the audit scope, but as an additional precaution, they've started doing it. Audit has a very serious limitation. Okay, there is a limitation on time, deadline, personnel, cost, etc. Now, this is a big challenge. In fact, I have not put a slide. Now, recently, some time back, the NFRA had published a report. There is an expert advisory committee of NFRA has suggested that a lot of audits, the audit should be exempted. Now, why? There is a single point. In fact, I met the person who wrote the report. He has done a study saying that with this requirement of auditing standards, the audit minimum time and a cost for performing an audit is certain X. And he went and found out that so many companies, their audit fees is nowhere near that, say 1.5 lakhs, 2 lakhs and all. Then he concluded, because the auditor is not charging that fees, there is no effective audit is being done. It's a news to most of you, but that's what his conclusion is. They say auditor is just signing off without doing the appropriate audit procedures. So audit fees is becoming a problem. But when you go and who fixes the audit fees? It's the management and the shareholders. Okay, I'm sure most of you are in audit. It's always a negotiation every year. There is always a big shortfall between what is your cost involved in an audit or the amount of, if there is a more problem, the more cost will be there, but it will not be compensated. So there is a limitation of the cost. Okay, the limitation of personnel, limitation of deadline, the time involved in performing an audit is stiff. A lot of information is not in the financial statements. Very often, the bankers and others, okay, take some of the statement which is part of the financial statement. For example, stock statement received by bankers, it's never part of the financial statement. They always complain the stock statements do not match with the financial statement. They keep on complaining. Now they have actually brought it down in Caro for us to verify. Okay, this is their demand. It's not part of the audit. The stock statements are not part of the financial statements. Okay, but they have said no. Please just check those stock statements with the financial statement. Okay, this is never a part of an audit in any other domain, and we have been included in India. The financial statements are as per respective standards and are often confused with income tax and other requirements. For instance, GST person will say this is not in line with GST. Okay, the income tax person will say it's not in line with the Income Tax Act. But both of them are not, these are all not in line with, they can look at the income tax liability, GST liability, but not the financial statements will be in line with those law. Now, regulators are bridging the gap. Now, this is interesting. When I look back, now there is a difference between the perception and expectation and the actual work as per law or as per professional standards. Now, what has happened, interestingly, over a period in our country, in India, that regulators are bridging the gap. Now, how are they bridging the gap? They have started putting their expectation and perception into the audit reports. Okay, they have started controlling. They have started controlling what the auditors should do as far as accounting is concerned, auditing is concerned, what is to be the type of the report, what are the additional points in the report. Okay, then they have now started doing quite a bit on audit appointments and rotation. which is not the same in all companies. For instance, Reserve Bank of India has its own regulation on appointment rotation for banks, for NBFCs. Insurance regulator has got their own appointment rules and regulation, which are not exactly in line with the Companies Act. Okay, they are much more stricter. Now, what has happened here is there is a challenge here. Okay, for them, these are necessary to bridge the gap on independence, that auditor do not get familiar with the client. They have been auditing for 15 years, 20 years, 10 years, even 10 years. Okay, the company law provides up to 10 years, whereas these regulators have changed it. Insurance regulator wants only a 4-year term. NBFCs want 3 to 4 years in banks. Okay, now what are the challenge between this? It is a challenge on the auditors because when you get appointed for a shorter period, the initial period of appointment, you have to put enormous effort to understand the company, their systems, and how you will proceed on the audit. But the investment you make in the first or second year of audit will last you only for a short period, say 3 years or 4 years in the NBFCs. So the cost of the audit, the effort involved in the audit has increased, but there is no corresponding benefit which has been given in the form of additional fees. Okay, so that has become a problem. And again, you won't have people who have got experience or expertise in that particular entities or the industry. So you need to go and find out them. Okay, and you get rotated out. You may not get a similar industry again. So it becomes a waste. So there is a big challenge in respect of personnel to the audit appointments and rotation. Regulators, auditors, performance, review, and action. Now this has become over a period. The institute used to do review the auditor's performance. Institute over a period has formed various steps, but the government and the regulators are not satisfied. Every regulator has got certain things in their law now being done. MCA has put in NFRA in its report. They all the companies which have been they actually oversee the auditor's performance. They can do inspection, they can review the auditor's work papers, they can take action against the auditors. The same way Reserve Bank of India and insurance regulators have got powers to punish the auditors. They don't even do a review. They just write a letter. If something is wrong, they just give an opportunity to present yourself, and then your action is taken against you. Okay, so there is a challenge. They don't follow the due process as per the law, whereas if you are under the Chartered Accountants Act, there is a detailed procedure to follow. Okay, so NFRA has got a procedure, but the moment these things becomes a regulatory action, there is a huge time gap between these review report and any action being taken. By the time the auditors lose their reputation, there's a lot of challenge. Okay, bankers keep on persuading the regulators to add their requirement as part of the audit. As I told you, repayment of loans, stock verification, then fixed asset, whether it is in the name of the company, and all those kind of reporting that they've added. It's all over a period of and whether the companies have given loans to third parties, whether they have been in arm's length thing. So many reporting they have added. It's because of the banks, which they are supposed to do themselves. They have passed on to the auditors and to report specific additional information as part of the financial statement. So most of the regulators have added a lot of information which they want for regulatory purpose as part of the financial statement. For instance, banks and NBFCs have got a whole sorts of information which is for regulatory purpose and which needs to be audited by them. Okay, the banks and NBFCs have got a specific instruction to the auditors also. Any non-compliance, anything which is in the form of a qualification, we need to directly report to the Reserve Bank of India. Okay, so the reporting is not just only to the shareholders, but directly Reserve Bank of we are reporting to the Reserve Bank of India in many cases. Okay, and we become responsible to them. What it means, the regulators are bridging the gap. Now, if you ask me, the gap is expanding. It is from their perspective, they are bridging the gap. They are making whatever is their expectation or perception as law. And now what we need to perform as per law has increased. And so the gap between the performance and the law has increased. Means your responsibility under the law has increased. Okay. So, and that is one thing. That's one of the important things you need to know about. Now they've gone including everything as part of law. For instance, we found the accounting standard is now as per Companies Act, auditing standard is per Companies Act. Okay, there is a additional reporting which has come as part of the disclosures of the Companies Act or RBA guidelines or insurance guidelines. Now, what does it mean? Now, so long as they are part of the institute's publications or institute's pronouncement, the interpretations were with the professionals, with us. Now, what has happened? It has become a part of the law. Now, everyone interprets the standards, the interpretation, the compliance, the monitoring are all slowly with the regulators, moved to the regulators. Now, what's wrong in doing that? Now, it's like this. If you've got how to treat a patient in the medical literature, and as an accountant, I go and interpret that medical literature, how good it is. Similar to that, it says how the accounting has to be done, how the auditing has to be done. There are standards. This interpretation of these standards is being done by non-experts. Okay, it could be bureaucrats, it could be lawyers, it could be those occupying any other thing, or anybody. You just, okay, the profession is only preparing it or providing guidance. Okay. Now, what are the things which they are doing now? They are just picking up those standards, selectively taking those statements, selectively is taking what we have seen is paragraphs, selectively is taking some sentences and say, oh, this has not been followed. So you have been negligent. This is not as per your own auditing standards or your own accounting standards. So there is no holistic view taken of the auditing and accounting standards. That's a grave danger. All additional information which the regulator or banks want is becoming part of the financial statement, are being forced to be audited. So what has happened? Your work has been increased. So your focus on the financial statement and their true and fair view. Now you have to audit things which are not part of the thing, which are specifically, which are required by the banks. Okay. The audit work has been increased. If there are expectation gaps, audit reportings of work, they are being bridged by additional reporting. I'll just tell you some example. It's very interesting, very subtle example. Now we used to say in the past, I'm sure everybody knows this wording. If you read the audit report, according to the information and explanation given to us, there are various reporting X, Y, Z. That's a standard reporting in audit. Now, certainly it got changed in the last Companies Act. Okay. This is not in auditing standards internationally. Now there is an additional reporting. We have received all the information and explanation which are required for the purpose of our audit. Now what happens? Now I can't take shelter that the information and explanation given to us is wrong or insufficient or inadequate. Now we are supposed to put ourselves saying, confirm that we have received all the information and explanation which are required for audit. So the gap is being fulfilled by the regulator by making ourselves to certify that we have received all the information. So you cannot take shelter on any information and explanation. If it is wrong, they will say, you only reported that all the information and explanation you are required for the purpose of audit has been received. So if something is not received, then you are negligent in reporting that clause. Okay. Now, in the past, we used to test the internal controls and rely upon them for reporting. Sorry, it has come as routing, it's reporting. Now, internationally, over a period has happened. Now they say, no, auditor is the best person to report on the internal controls, especially on the big companies. It started with various countries, SOX reporting in US, Japan, SOX, and all those stuff. We have picked it up. So now the auditor is required to report the internal controls over financial reportings. They are adequate and there are no exceptions. So now what happens? This is a very subtle change. Except for small companies, this is not required for smaller companies. Now what is the issue? Now you can't just rely on the internal controls, and if there is an issue with the internal controls, and very often you will find the internal controls, if you say there is a fraud, obviously the internal controls for fraud mitigation has failed. Now any fraud, they say, oh, okay, you have not looked at the frauds, but you have looked at the internal controls and you have reported that they are adequate. Okay, so you are you have been negligent in reporting the internal controls are adequate. So you are caught. So the reporting, the gap which the regulators had have been bridged by them by putting the additional reporter. But at the same time, the auditor's duty and responsibility has enhanced substantially. Okay, this is certain changes over a period, and the auditor has become much more responsible. Now, what can we do to bridge the gap between expectation and the law? Okay, in effect, the regulators are bridging the gap between the expectation and perception and the requirement of auditors per law, as we saw. So the reporters of auditors to perform is substantially enhanced, but still, we need to continuously engage with regulators. This can be done by a group of auditors who are auditing specialized industries when they meet the regulators, or the institute itself. Okay, and we don't meet other stakeholders. Okay, like financial institution, but as a group, as an institute, we should be meeting the financial institution to temper their expectation. We should put forward our case that unfortunately over a period, what we did was we went and marketed our services and say we could do this, we could do that. We found it as a professional expansion of professional activities, but it had this side effect. Okay, now they are all coming and back coming. No, why don't you do this? Why don't you do that? Even though it's very difficult or impossible to do such reporting. Okay, but we need to be clear and we need to put forth our stand saying that, look, this is not possible. Now, by accepting the reporting requirements, which are practically, I would say, sometimes impossible. Now, what happens? We put a lot of caveats in our reporting, and over a period, the regulators come back and say, you're not reported anything. And we go and tell them, no, this is the reporting which I have done. Okay, literally, I have qualified the report, or I have added words to the reporting. Okay, then they say, no, you have not performed your duty. Okay, so we get a bad name as a profession. So we need to be forthcoming in telling what is the limitation of the scope of the audit, limitation in the way in which their expectation cannot be fulfilled, all those kind of things, especially in respect of areas where there is not completely possible. Okay, now I'll take a couple of examples. Frauds. I will come to it later. There is a responsibility of the auditors to look at frauds, but the entire audit cannot be focused on saying that there is a fraud which is present and I am looking for frauds. Okay, it's impossible to do an audit. It becomes, anybody who has done a forensic exercise will know how different, how detailed, how focused, now time consuming a forensic examination is compared to the audit. Okay, the second part, very often people come and ask you about the future ability of the entities. For instance, future ability of the entity to repay the loan. Now, the auditor is only reporting. He is not an astrologer or a magician to fulfill saying that the companies will be repaying the loan as and when they fall due. Okay, it's there, but I'm sure we have the guidance note, we have a reporting. But at the end of the day, personally, I could find the auditor can never certify 100% of future ability. You need to put a caveat. You need to put what you have done. Okay, so these are some examples where it's so difficult to fulfill. There is a need to engage in dialogue to keep some of the reporting as separate exercise and not part of the audit. I think this we need to do. I remember pretty long time, 3 decades ago, one of the US banks, we used to do a separate reporting on internal control over the credit area. They said the auditor should do it, but it was not part of the audit. It was a separate exercise. Okay, so we need to engage in dialogue with the authority saying that, look, these are not part of the audit, but however, we are competent to do it and we will do it as a separate exercise, which will not be as a part of the year-end audit. It could be done separately. Okay, I think that we need to do it. Clarity in the responsibility and the limitation of additional reporting. Now, this is becoming too much. A lot of additional reporting or additional information is being put on the financial statement. I think we need to be very clear on what we should report and what are the limitations of such reporting. Okay, some of them are not even part of the financial statement. It could go beyond. For instance, some reporting was there in limited review. Fortunately, they deleted it and they realized that the whole reporting is based on the registrar of shares and nothing to do with the auditors, and they removed the reporting, fortunately. Okay, but we need to understand, there is one need to understand that our limitation between the expectation and the law, because the law is with the regulator, with the government, they can do anything they want. Okay, we can plead everything. Okay, they've gone too far now. Okay, and we have got lesser option. Now, what's the option? You fulfill the law. You have additional things to fulfill. Now, there is a huge, this is a what to do to fulfill the expectation as an auditor is a huge subject. I will touch upon, I went through this thing. I will touch upon certain key aspects in practice, okay, which is important to fulfill the gap in respect of the requirement and respect of the law. Now, this is not in the standards, okay? This is what I think we could do. What we need to do, bridge the gap between the expectation and the law. Now, regular and timely interaction with the regulator. Now, this may not be done by the individual auditor. This can be done by the institute itself, okay? I can tell an example in respect of the central audit of the banks or certain bigger NBFCs. RBI has been interacting with the statutory auditors before the start of the audit. Okay, so they this is as a group or sometimes as individually. I'm not sure whether they are doing it regularly these days, but I have personally interacted with them. They used to, the person who's charged of inspection will call us, have a discussion. I could tell you these are all very frank and very good interactions with them. They are not here to find fault with us. They are actually telling them what are the things which the concerns which they are having in a particular company, which is there as a part of their report, sometimes which cannot be told, which are not part of the report. They may express concern and we can put it, we can use it as a part of our risk assessment. It has been of great help, I would say. For instance, I still remember there was a confusion when the IFRS came, Ind AS came for NBFCs. There was a contradiction with the Reserve Bank of India guidelines and the Ind AS regulation as per the Companies Act. The Reserve Bank of India did not change their regulations. So they came, they have absolutely no clue. In the interaction with them, we could tell them, boss, you cannot expect us to perform the audit, now which is to be followed. Give us a guidance, give us in writing. They did not give in writing, but they gave whatever is prudent you follow. Okay, that's the kind of thing they did. And there were variances in the method of accounting, and they took 1 year to rectify it. And they brought out guidelines and what should be in the financial statement with their guidelines. Okay, so it helps. Okay, then if there are there is a specific reporting, for instance, Reserve Bank of India has got inspection reports in respect of NBFCs, banks. Okay, if you have got any issues and they can share with you, the company is supposed to share with you. If you have got anything, clarification on those reporting, you can check with them. Okay, and you can, that's also an added advantage by meeting the regulators. You can go back to the audit committee and the board, say that, look, this is the regulator's view. This is what the regulator wants me to do. I can't help it. Okay, so it adds a lot of power to you. It's not just, there is always a conflict between what the company wants, what the regulator wants, but it gives you more teeth. If you have met the regulators and the regulators have told you, you could go and tell. Okay, so this is not there in any standards, but I'm just telling you what practical things which you could do. And to guide the auditors of issues of interpretation of the guidelines, as I told you, a lot of times the Reserve Bank and other regulators issue guidelines. There are issues on interpretation. Now you can interpret the way you want, but at the end of the day, it's the regulator, if he interprets whatever his guidelines and tells you, look, you have not followed these guidelines. This is what is the interpretation. You can argue, but at the end of the day, it is the regulator. They are the regulator and they want their guidelines and this is their interpretation. They will come out with the guideline. Okay, so it helps to interact with the regulator well. other interaction is the audit committee. Okay. I think audit committee is consisting of independent directors. They have a significant role to play in compliance with the auditing accounting standards, and the company follows the law. Their responsibility is these days is even much more than the whole-time directors. Okay, so the audit committee is independent. Most of the audit committee members need to be independent. So it is better to meet the audit committee, look at their views, look at their concerns, and if there are matters of judgment involved, meet them and take their judgment. You tell them this is the judgment involved. Are you agreeing to it? All those kind of a thing. So you take the audit committee with you. Okay. This is an additional comfort when you perform the audit. Okay. These are the two things which is important. Now, while we have lesser controls of shareholders' expectation or other stakeholders' expectation, we are supposed to have complete control of our performance. Okay, it's not actually complete. It depends on various limitations, as I told you, or performance to comply with the requirements of audit as per law. Now, I'll focus on certain key areas which have come up time and again whenever something has gone wrong, whenever the regulatory review has taken place. As part of FRRB, I have been part of reviews, and what audit quality control has reviewed. The NFRA has come out with some reports, okay, or in the public domain where the criticism of auditors have come, okay. These are the, it's a very vast subject. I focus on what I feel is it's a key things. Now, first thing is independence and code of ethics. Very often, I would say internationally and in India, the auditors have been criticized that they have not been independent. Okay, there is a set code of conduct, code of ethics by the institute, and also quite a bit of regulation under the Companies Act. We will briefly deal with that. Effective planning. Okay, the effective, what we do, we just have no time to plan. We just go and do the audit. The auditing standards require detailed planning, a lot of efforts to be done by detailed planning, and the senior most person in the audit is supposed to spend more time in auditing effective planning, because you plan in advance, you can focus on performance as and when the issues arises. Okay, so the effective planning is the key things. Now, the next point is understanding and identifying the risk, including fraud risk and their mitigation. I'll come to it. Why is it important? We are no longer call ourselves a watchdog and not a bloodhound. We ourselves as standards about our responsibility in an audit. Set process to comply with the auditing standard. It's very, very important to have a set process. What will you do? It is auditing standards are vast, that's complex, they're voluminous. Now you need to have a process in place that the process is being followed. Basically, how will you do a planning? How will you do a risk assessment? How will you look at the procedures which will mitigate the risk? How will you do the substantive and testing of controls? How will you conclude on audit reporting? How will you report? How will you plan your staff? So many things, so many process. How will you document it? How will you review the documents? So many things are there in the auditing standards. Okay, the auditing standards are as voluminous or as the accounting standards, but very often we give lesser importance to the auditing standard. We give a lot of importance to accounting standards. As I put it elsewhere, we protect our audit clients rather than protecting ourselves. Okay, so this is very important. The next aspect is judgment and audit skepticism. If you look at the auditing standards everywhere, this runs through the auditing standards. And very often, whenever there is something is gone, very simple thing, they will say auditor has accepted things without being skeptic. The audit skepticism is a word which is being used in many places, and judgment also is being used in many places. The judgment has to be done objectively, and we will come to it later in detail. use of technology. Now, these days, I'm sure in a day-to-day life, the technology is being used very well. Now, the technology have their own risks. There are lesser audit trials, there are automated entries being created. The auditor is not a technical expert. He is not an IT expert. But at the same time, without the knowledge of the technology and the controls which are being posed by the system, he cannot do an effective audit. I'll come to a brief slide on how to use technology and what is the things which are happening in the audit field. In fact, many of the experts have come back and told over a period of statutory audit will lose its relevance. Whatever is being needed for audit will be coming out of the systems. Okay, it's not untrue. For instance, if you look at it nowadays, tax deducted at source, you need not check it. It's automatically coming from their IT system. The IT department is collecting a phenomenal kind of information and is putting as part of their whatever is their information which are there. Okay, so the technology is being used independently to corroborate the information of a particular company or others. Okay, so for instance, GST. Okay, people are looking at GST. The GST is automated. A lot of places the GST information is available independent of the company itself. Okay, so there are technology which is every part of our life. Technology is pervading, and accounting is no exception. Auditors need to fulfill the gap in the technology. Okay, that is one of the things there. Appropriate conclusions and reporting. Very often we find that you have the data, you have the information, you have some exception. Now, what we find, we don't appropriately conclude. For instance, if you have done an exception, you need to extrapolate the exceptions to find out the total population and see what is the impact of that exception. We don't do it. We don't, it's not easy. We need to add additional audit procedure. We need to increase our audit testing before doing conclusion. That's one thing. The second thing is reporting. If we find something not up to the mark, not correct, now how do you report? We have found very simple errors that the reporting is not being done appropriately. If you look at the audit reporting standards, now there are various ways of reporting. Okay, there are modified reports, which could be a qualified report, which could be a negative report, which could be a report where I don't express an opinion. Okay, then there could be emphasis of matter. Okay, there could be additional paragraph which has been put, which is without qualifying. There are various kinds of reporting, but many times the auditor reports in a wrong manner. That this is very clear. Anyone who reads it, by reading it, could find out that the auditor has done a mistake. Okay, this is a risk. This, I would say, it's a high category. And anything non-compliance with the audit reporting standards is viewed seriously by the institute and the regulators. Okay, so that's important. This is an area to be focused. Now, what is the ICAI has done in this area? Over a period, ICAI has done. It's not that there is always a gap, because we as a profession, we have different sizes. The audit involves a lot of investments in personnel, investments in infrastructure, updating. So many things are involved. Okay, over a period, the ICAI as a regulator and also as a professional body has taken a lot of steps. Okay, peer review. They just peer review of the various firms which are involved in various categories of audit, and they give a peer review report. Now, peer review report is mandatory for various entities. Now, even it's becoming mandatory, including bank audits. FRRB. FRRB is a body for the past so many years which looks at the financial statement, the audit report, standalone. They don't look at any other report. Okay, they pick up the things from the auditor or the things which are available in the public domain and report exceptions in the audit, various standards, compliance, so many things. Being a part of the FRRG group, I can tell you there are many things which could be picked up from the audit, accounting and audit report. As I told you, wrong audit reporting very often is reflected the manner in which the auditor is reported, we could easily say this should have been qualified. Instead of then they have put an emphasis of matter paragraph. Okay, so we could report, and it's very serious. Okay, then financial statement. Whatever is the financial statement, like disclosures and all, it's there in the financial statement. If it is non-complied with, okay, and if it is significant, one could easily pick up the non-compliance with those standards and could be easily reported. If you see FRRB reporting over a period of time, you'll be surprised the amount of non-compliance which have been issued. Some of them may be minor, some of them have gone to the disciplinary committee, etc., etc. Audit quality review. This is now been taken over by NFRA for many companies. Okay, the QC review started by the institute almost a decade ago, more than a decade ago. And this reviews not just the financial statement. This actually comes to the auditor's point, and they review their audit working papers to whether they have complied with the quality control and the reporting standards as per the auditing standards. Okay, this is this you open your work papers to the quality control review. This now is being taken over by NFRA in of those companies. It is still evolving. They have not done such a significant review of the companies. They are all expanding. Of course, the quality control review by the professional is quite different by quality control review by the regulators. Okay, it is a challenge. It's being challenged. Updation of standards. Now, one of the problems which we had was that I remember about 4 decades back, Reserve Bank of India said that our guidelines have not been looked at by auditors. No, we could prove their guidelines were never there in the public domain, nor sent to the members, nor sent to the institute. How do you expect us to update your guidelines? To be update of your guidelines. Okay, it went on. Okay, they said, no, if you had asked, we would have given. Now, why should I ask? Okay, if the regulator does like that, it went. Okay, now the institute is updating every standard, every guideline. They are even updating which are regulations which are coming up. Any requirement for special industries, they are updating. Okay, there are a lot of links to the regulators. So you cannot say I'm not up to date with what has happened, but it's a challenge. Okay, updation. There are information which are available, but you need to be updated. I always say, if you don't update, you are outdated. Okay, so institute is taking its steps, but the auditors have to take their step to update. Availability of all these. Now, everything is available electronically. You don't need to go there. Now, if I want to look at the accounting standard, I don't need to go to a book. I can go to the website. I can see. If I need accounting standard, I don't need to go. I can look at the websites. Okay. And okay, sometimes there are tedious. Okay. Even the books are now, e-books have come and you can check it out. Now, the other things which the institute does are continuous professional education. The auditing is dynamic. Accounting is dynamic. We need to update ourselves professionally. The way I did the audit 3 decades ago, I cannot do it today. And the way I'm doing it today will be drastically different 10 years hence. I can tell you that a lot of audit procedures will be taken by the machine, will be taken by the computers or artificial intelligence. Okay, I have personally done some of them. Okay, and they need to be updated. You need to be updated of what is possible. You may not be an expert in all the field, but you need an expert of what all you could do. Okay, and you can go for the experts to do that. Okay, I'll come to you 1 or 2 examples. For instance, when it comes to technologies. Okay, so and you need to be, for instance, even there's something like CPE, they are taking steps. Okay, now for instance, they've tightened it. Okay, now you don't need to just attend the meetings, you need to answer some queries. Okay, at the end of the section, there will be some queries. Don't worry, it's supposed to be quite easy. Okay, so they have put that you actually listen to these lectures and you understood what is being told in the lectures. Regular guidance in all new areas. Generally, we find quite a lot of guidance which has come, anything which is a new pronouncement, new standard, We have got regular thing where additional guidance are required. They have been giving continuous interaction with the regulators. The institute is taking a lot of steps to interact with regulators where it is not possible for the individual auditors to interact. Okay, many times the regulators don't even see the auditors. They say, no, we will see the institute. We will give the instruction to the institute. Okay, now it's quite a bit of change. It's changing, especially I have seen it in Reserve Bank of India. They are much more professionals. Okay, so it's changing with them. I believe this could happen with insurance regulator. There could be electricity regulator, so much and so forth. Okay, or banking regulator, banks themselves. Okay, as a group. So the institute tries to interact with them. They interact with the banks. Okay, quite a lot. Okay, before the audit starts. Okay, institute is taking the steps. Now, what steps the auditors can take? I've just listed on a few of them. There is not enough time. Okay, I've tried to focus on what I personally felt based on my experience. What are the key things which are there? I will put on top independence and code of ethics. Now, when you perform an audit, we are competent to perform. Okay, but the audit is supposed to be an independent examination of the financial statements. This is a very subtle aspect. Okay, in the past, many a time adequacy of auditors' independence have been questioned by the stakeholders whenever something has gone wrong. Okay, so this is very, very important. You don't need to find anything wrong. You just find whether the auditor was independent and just blame them. He was not independent, so he has not applied here objective judgment. Okay, so this is very critical as far as we are concerned to fill up the gap. Now, this is becoming much more stringent. Okay, there is a new code of ethics, okay, recently, which has become mandatory, okay, which is in par with the international regulation. Okay, now, you don't stop with the code of ethics by the institute. The regulators themselves put a lot of things in the independence. Okay, for instance, the Companies Act and the rules thereunder have put a lot of restrictions on what are the services you can offer. Some of them are prone to interpretations. Okay, same way, the Reserve Bank of India, they have their own guidance, what the auditors can do, what the auditors cannot do. The CAG, in respect of government companies, have got their own independence regulations. Okay, so even this independence requirement is widespread across. Okay, everyone puts what they feel it should be more tighter. Now, if you look at independence, there are two of them. There is two aspects to independence: independence of mind and the independence of appearance. Okay, at the end of the day, independence is a state of mind. When I interpret certain things, when I enter into a judgment, I need to do objectively in a professional manner with professional skepticism. Okay, we'll come to it a bit later. And whereas independent in appearance is presence of certain things, okay, which any third party could pose question if you have done this particular work, okay, whether you could be independent. Okay, now the independence, as you told, it's being regulated by and large Companies Act, Code of Ethics, etc. It involves no financial interest. For instance, one is financial interest in the entity which we are doing. Okay, and the second part is relationship. The third part is performing services which are supposed to affect the audit independence. Okay, now I will do some things which are theoretical, but they are the base on the concept of independence. There are a lot of individual requirements, what services you can do, what services you cannot do, but you need to understand the basic conceptual framework on all of them. All of the independent requirements is based on this concept. Now, one is self-interest threat. Now, if I have got financial or other interest in the entity which I am auditing, I cannot take an objective judgment. Those interests can inappropriately influence my judgment. Okay, so this self-interest threat gives rise to financial and other regulations. self-review threat. A threat, if I have performed certain work on respect of a company and I am going to rely on that work, then there could be a perception that I would not have done appropriate evaluations of the results of such work. Take a case, I have done evaluation of fixed assets. Now, when I come to auditing, now I have to report whether there is no diminution in the value of assets. Now, if I rely on the valuation report of my own, then I will not be objective independently because I have performed a valuation service which I am going to rely on myself. So there is a self-review threat. Okay, so this gives rise to prohibition of certain prescribed services which are there in detail in both our code of conduct, and many of them are there in the Companies Act. I'm not going into the details. Familiarity threat. Now, long or close association makes more sympathetic. Now, if I am doing an audit for a long time, the criticism always has been that you have become, okay, you're not friends, you have not become friendly, but you have become more sympathetic. Okay, you are empathetic to the views of the company and the whatever is beneficial to the company. Okay, because of your long association with the company. Now, this has given rise to rotation, joint audit, etc. Okay, now rotation is all the companies except the small company, there is a rotation. All the regulated industry, there is a rotation. Okay, at the same time, non-familiarity threat also has an issue as far as the quality of the audit is concerned. You need to spend a lot of time in the initial years to familiarize with the company, its risk, its systems, etc., etc. Okay, advocacy threat. Now, if suppose I'm representing a company in a court of law, in a tribunal, or in a particular point, when the same point comes as a part of an audit issue, now because I'm advocating the client's viewpoint, my objective interpretation or objective judgment could be affected. Okay, so because of that, the advocacy threat, there are many services which have been prohibited. Okay, now for instance, even the tax services, now internationally and slowly it's being prohibited beyond certain forums. For instance, anything beyond many of the listed companies, it is fully prohibited, or in the internationally, or it is prohibited beyond a certain level. Okay, or you need to prove that you are not advocating a separate point, position of the company versus thing. It is more to do with certain factual errors and etc. Okay, it's a problem. So advocacy threat is also issue as far as independent concern. Intimidation threat. This is not written. Who can intimidate you? Okay, this is not written anywhere. It's not there, any of these things. Okay, now this threat, as far as you are concerned, you are not supposed to take any work, any audit, okay, if you believe that someone is going to take undue influence upon you. Okay, so it could be just the size of the company, it could be issues. Okay, so because of that, many times you will find, even for bank audits, there is a grading, and they don't appoint the people they are not at the top grading for the audit of the central audit of the banks because of this intimidation threat. Because if you're not qualified, if you're not experienced, you could be intimidated to accept the opinion of the banks which are complex, which they could be there. Okay, so this is not written anywhere. Okay, so as far as you are concerned, you should also take them. Can I be intimidated by the client? It's a huge client. I'm a small person. You may not be actually losing your independence, but there is an appearance that your independence could be affected because you're small. There is another threat which could be there. If you are, if your fees from a particular group is very high, there could be a threat of intimidation from that client saying that, look, I will lose your audits, etc., etc. Okay, so it could be in various forms. This has given rise to various restrictions. Auditor responsibility in respect of fraud. Now, this is a big thing. Now, previously we said we are a watchdog, we are not a bloodhound, and that's our defense. Okay, the old judgment not in our country, is there in US, UK, and we have followed that. But over a period, the expectations are people have pushed the auditors and say, look, if you are not looking at the fraud, if you are not having any duty on the fraud, now what for the audit is necessary? Okay, if you are looking only at the errors, that I can do myself or it can be picked up. Now you need to look at the fraud. Okay, there has to be some responsibility you should take. So now over a period, we have our own auditing standards, which is prescribed, SA 240, about the fraud. What is the auditor's responsibility in respect of frauds? It includes risk of material identifying risk of material misstatement due to fraud as part of risk assessment, and plan and perform procedures to mitigate those risks. It's very important. Okay. Now, this can also enhance the quality of your audit. Okay. Now, what we do when this is there, when you have a risk assessment, I will come to it later in a general way, we look at what can go wrong. Means what type of frauds can happen in a particular thing. Will they result in a material misstatement? Will it be material? Okay. And document what can go wrong. And can I verify, can I have audit procedures and perform appropriate procedures to mitigate such risks? Okay. So that's, for instance, revenue, bogus revenue. There could be a bogus revenue if you identify the room. Now identify the procedures which you can perform to ensure that none of the revenue is not bogus. Okay, it's not. For instance, if you have got any goods involved, the revenue is not being booked without the goods being delivered or something like that. Then how do you do that? Okay, what are the procedures you can do, and then mitigate those risks. That's what is required as the auditors today. It's no longer I can go and tell if some fraud has taken place. I have not done any work. It's not my problem. It is a forensic work. I'm an auditor. That's not possible. The standards are there. Over a period, revenue has been identified as a default fraud risk. Majority of the frauds internationally in the past have taken place in this area. Why? Because if you look at any company, the revenue is a biggest figure. Even a marginal increase or adjustment of revenue fraudulently could substantially improve the results of the companies. Okay, so because of that, people tend to do more fraud in revenue rather than in a smaller item of expenditure. Okay, so revenue need to be default identified as a fraud risk. If you're not identified a fraud risk, it's your duty to ensure that you document why it is not a fraud risk, why you have not identified. It's a challenge. Okay, very often we find better identified as a fraud risk and do the procedures. Okay, but we need to understand still audit is not a forensic examination. The focus, the purpose is not going and finding out that there could be fraud in all the areas. Okay, I have identified the fraud risks and then mitigation. There is a subtle difference. Okay, now any area I take, I cannot say, oh, there could be a fraud in this. I'm looking for fraud and I'm identifying for evidence. If you start doing that, then you can never finish an audit. That's not our responsibility. At the same time, we have got a responsibility to identify the fraud risk and identify procedures and perform those procedures and conclude there is no material misstatement in respect of fraud. Okay, so this is a subtle subject. Over a period of time, we need to ensure there could be ifs and buts in this area, but we need to understand that auditing standard. We have to fulfill the auditing standard and we cannot shelter. We need to prove that if there is a fraud happens, we have not picked up, that we have done our work as auditor as per SA 240 and still we couldn't pick up the fraud. It's a well-conceived fraud which could not have been picked up. There's a lot of explanation to do. Compliance. Now, as I told you, it's no longer the Institute of Chartered Accountants who interprets the standards, both accounting and auditing. It has now become part of the law. Now, what happens in this case? The authorities are interpreting the standards. Okay, so they are now what they are doing is they are taking standalone sentences and paragraphs. If you read many of the regulatory reports on audit, they have taken standalone sentences and paragraphs from the standards. and report that they have not been complied with, and the auditors is negligence. It is SEBI, it is NFRA, it is some Reserve Bank of India. Okay, many of them, if what has happened is, if something has gone wrong, okay, the auditors, trying to find out, the auditors has not done their work. This is abroad, when there is civil society, where there is jury system involved. This is what used to happen. If there is something wrong, auditors are at fault. That's how it happens in the United States. Okay, because the jury is not an expert. Jury is taken from various things. So similar things are happening here. The authorities may be well educated, but they are not auditors. They have not done audit. The person who is interpreting the audit has many times not done an audit. Okay, but they are regulators. They are officials. They interpret it, or even the legal person. The judges sit and make judgments. In any way, the judges are gods in this country. They can make any judgment, because at the end of the day, everything goes to the court of law. What they feel is very important. But they also in the past have made use of expert witnesses to interpret the law, interpret the auditing standard. Okay, whereas regulators feel that they are competent to do everything. Okay, so that's important. We verbatim follow the law. It's very challenging now. I cannot follow verbatim, but you need to follow all the standard in toto, in entirety. Okay, they are finding fault with some areas and say, because of that, you have not done an efficient audit, or your judgments have not been objective and you have been negligent. That's how the conclusions are being done. Okay, over a period, the responsibilities have enhanced substantially as per the standards. Okay, because of this particular risk. Okay, I would say our responsibility is much more in other countries where the standards are not part of the law. Okay, now how do you comply with them? Very often we tend to become, just a practical example, you tend to put some checklist and then I will tell you practically, the checklists are fine so that you have to find out what you have not missed out. But the checklists have got a big danger. People tend to put tick marks without actually performing. So you need to convert the auditing standards into some audit procedures where the person cannot answer just yes or no. You need the audit procedures, and the audit documentation needs to be tuned to comply with the auditing standards. Okay, it's been evolving. There are things which are coming out in the various agencies are coming out. The institute also works upon various things. Okay, it is being factored now. How audit standards could be practically being followed and documented. Okay, as I told you, we need to focus on auditing standards. Unfortunately, we are focusing more on accounting other than audit. In spite of, if you look at the way various very simple thing, a CPE in the past, now it's been changed. Okay, we have more sessions on accounting standards and few sections on auditing standards, which over a period has changed. The Auditing Standards Board has gone and told, look, auditors have to be in, not only know the things, keep on reminding ourselves what is the auditing standards and how to perform them. It's over a period of time, things keep on changing. Okay, so there has to be a focus on the standards. Now, why the standards? Because the standards are made by us, and we are telling the whole world that we will follow these standards and our reporting will be as per the standards. Well, the government has put it as a part of the law, but it is being made by us. Okay, so if we don't follow ourselves, it's very easy for anyone. Look, you have prescribed your professional standards, you have not followed it. Okay, so that's why it's a very high risk area. The other area which, according to me, is very important is risk assessment. Now, very often we start doing the audit just like that. We go and test various areas. We get the financial statement and start looking at various areas and audit tests. Okay, that's not the way the auditing has to be done. The main important fulcrum of the entire audit, according to me, is a risk assessment. Now, why there is a risk assessment? Now, the audit is very limited. You are supposed to limited time and effort. you are supposed to be reporting on the risk, mitigating the risk of material misstatements due to fraud or errors, apart from some specific reporting. I'm not covering that. Okay. So now, if you are to look at that, first of all, you need to assess those risks. Then only you can find out, well, these are the risks. Okay. These are the procedures which you have to do to mitigate those risks. And this is how I will perform. And this is how I will evaluate the results of my test and conclude. This whole chain has to be, if I ask me, this whole chain is what audit is all about. Okay, substantial report audit is, this is what it is. That's why risk assessment is a fundamental to our audit. Now, how does it help if I don't assess? How does it help if I assess the risk? Now, it focuses the audit in aspects so that the things can go wrong. Now, when I say what is the risk, now what do I say? What is the risk? Now, I just say sales. Now, what can go wrong in sales? Okay, or say interest. What can go wrong in interest? Or provision for doubtful debts. What can go wrong in provision for doubtful debts? Okay, you list out and then see how I can mitigate those risks by what kind of things I can do. That can be testing of controls. Mere testing of controls may not be enough if there are risk of material misstatement. You may do substantial, what you call audit also. Okay, so it focuses the audit where things can go wrong. Where things, the risks are lower, you may do procedures, still do procedures, but not as elaborate where things can go wrong. Okay, so there is a focus. Okay, it also focuses on the risk of material misstatement. For instance, when there is the item which is involved is very small, I have got an asset which is insignificant. Okay, now the risk may be not material. Okay, so I may not be spending too much of time on those things. If I foresee that just because it is small doesn't mean the risks are small, but I'm just giving an example. So if there is an asset where the amount involved is very low and there is no risk of, when I identify there is no material misstatement, even if there are some errors, it could be not be material. So we can spend lesser time, lesser focus on them. So the audit becomes more focused. By assessing the risk objectively, again, it's more focus. Okay, we don't waste our time with doing unnecessary procedures. I may be auditing sales, I may be auditing interest, I may be auditing provision for doubtful debts in a bank, but I will be focused on what can go wrong and then test those areas rather than blindly doing all the procedures which may not be fulfilling the mitigating the risk, the other areas. Okay, I won't do procedures. Suppose I have identified the provisions will be understated as a main risk. I will not be going and doing tests where I go and identify whether the provisions are overstated. Okay, I will do that, but I will not be focusing as much on them as much as the provision will be understated, the risk of understatement of provisions. That's very important when I do the risk assessment. It enables to choose appropriate audit procedures because the audit procedures are not just tailor-made. Okay, there are procedures, but you can't do all the audit procedures in all the areas. Okay, it's impossible to do it because the time is important. Or sometimes you may want to innovate audit procedures. You need to tailor the audit procedures in line with the entity involved and the risks involved. So it enables you to choose appropriate audit procedures. Okay, so very often whenever there will be mistakes of taken, they have not adopted appropriate audit procedures because they have not identified the risk appropriately and they have not identified the procedures which need to be done for mitigating those risks. Very often that is the case. That's the last important point. It enables you to conclude effectively for reporting on material misstatements. Okay, I have the risks of material misstatement. Then I will be looking at my exceptions very focusedly. If I have got the risks are lower, I will be doing the exceptions in a manner. I will be doing additional procedure, but the manner in which I will be doing additional procedure including will be different from where I have got more risk of material misstatement. Okay, so the entire audit become much more focused and there are much more probability There is nothing called 100% guarantee that our audit will pick up all the material misstatement, but the greater possibility of picking up all the material misstatement if your risk assessment is being done effectively and your procedures and the performance follows the risk assessment. I will just look at certain areas which is there throughout the standards, but which you will not find what it is. I can tell you a lot of things can go wrong in audit because of these two areas. Now we'll come to professional skepticism. Now, very often we tend to accept information explanation from client personnel, especially you go and discuss some information is given by the managing director or the chairman of a company. You accept them as if it's more reliable. But the history has taught us different lesson. The higher the fraud has been committed by the management rather than by the soldiers. Most of the times you will find out the management or the senior management, the managing director or the chairman, the owners, promoters have been involved with the fraud, okay, which is materially misstated, whereas the frauds committed by the employees will not be so material. I can tell you 9 out of 10 times, most of the significant frauds have been committed by the senior management. Okay. So now what we do, as when we go for do an audit, we accept the information and explanation from the senior management as if it is Bible. This is what it says. Okay. Or if you have a long-standing client, till now, till here, you have not found any fraud, any mistake, anything, you tend to accept whatever has been told to you. Okay. So if there is a long-standing client, you do that, or there are personnel you have dealt with in the past and they have been reliable, you accept all the information, explanation given to them in the past. This is what we tend to do. Now, what the professional skepticism says is, please don't do that. Your professional skepticism is there across the standard. One need to have a skeptic mindset. Now, what is the skeptic mindset? Now, the skeptic mindset has gone two, three things. One, the things could go wrong, irrespective of the person or the past. Irrespective of the person, as I told you, the senior management is the one who will be involved in the various reported frauds. So even just because it is senior management to give you information does not mean that it is more reliable or highly reliable. It doesn't mean because in the past I have not looked at any frauds or errors, this is more reliable. Every fraud or every misstatement has happened for the first time. Okay. Most of the frauds have happened for the first time. Okay. So we need to do that. So this, what do we do? Any information which we see, we need an objective, impassionate mind. We need to look at those information and explanation with corroborative evidence before accepting. Corroborative evidence does not mean you need to do a complete, what you call research or complete thing. You need to corroborate with other external evidence or other third evidence is not connected from the same source. Okay. And then say whether it is reliable. Okay. For instance, if somebody gives you anything on compliance, you go and look at some other compliance reports which have been generated independently of the involvement of that person who is giving the information, and then see whether it is matching. Okay. So that's important. So this professional skepticism very often leads to an inefficient audit. Okay. It's subtle. Okay. Over a period. So because of this, one of the reasons which has happened is auditors have become more sympathetic. They become more comfortable with the management and the company over a period of time. This is one of the single important reasons for audit rotations to come in all the areas. Okay. Now, at least now, the new auditor is expected to be professionally more skeptic because he does not know the client. Okay. So knowledge of the client is important for an effective audit, but knowledge of the client personnel is not so good. Okay. The next important is judgment. Now, every aspect of an audit is not tailor-made. It does not something which is written there. Okay, it's not like our what you will say engineering plan which says, oh, this is how you construct, this much of cement you put, this much of concrete you make, okay, this much should be the width. It's not engineering. Audit is not an engineering plan. It is involves a lot of judgment, okay. You need to make judgment throughout the audit process, in planning, in performance, in identifying exceptions and follow-up, and also concluding. Okay. Now, what is the judgment needs? The whole thing which we discuss on independence is you need to make judgments objectively and with professional skepticism. Okay. So judgment becomes a very important point in the aspect of audit. Now, very often internationally, many firms, there were a lot of issues which happened abroad. So what they did was they adopted the process, and then they went and showed the regulator, boss, look, this is the auditing standard. I have followed the auditing process. This is the process which I have followed to fulfill the standards. Okay. Then the regulator found out they have followed the process blindly without application of mind. So if you look at the US regulator, they have actually come out with separate standards which detailed on judgment. So it says there is nothing stopping your judgment. Your judgment is paramount. You need to, the judgment has to be exercised at the senior most level, and you need to make any change in the audit procedure based on your judgment. And there's a whole literature which is being there, how to make judgment, what are the things which you need to do, all those things they have put in their judgment. Okay, it's not there in the auditing standard, but the auditing standard made by the regulator has them. Okay, very often the frauds takes place. There is a difference. Very often in your saying, if you look at it in the past cases, we will say it's an error of judgment, but not a negligence. Okay, we are responsible for negligence or gross negligence as per the some of the places, and we have made an error of judgment. Okay, but I can tell you in practice there is a thin line of judgment. Okay, it's a very thin line of judgment to prove something is an error of judgment and not a negligence. Okay, so we need to be careful on judgment. It is always better to be prudent than be aggressive. It's better to say that something could go wrong. It's better to make judgment in a conservative manner rather than being in an aggressive manner. These are all lessons which are subtle, but it's of great importance. Use of technology. Now, the use of technology, I would say, if you ask me, the next 5 years or 10 years, what the single important thing which will change the auditing profession, which is already changing the auditing profession, is the use of technology. And I have not actually put in artificial intelligence. This is going to be the future. Now, what is the things? Just to see the basic things. No, you know, IT systems have been there for a long time. A lot of them have been, a lot of things have been automated, auto entries, calculations, etc. Take an example in a bank. Okay, the interest calculation is completely automated. Okay, the entries are made without any manual intervention. There is a manual intervention where the what you call the file, source file or the master file is being fed with the data, and based on the master file, there is a program for the interest calculation, and the interest is being calculated. Okay. Now, if you find any manual audit trail, you will not get them. Okay. But if you look at it, interest is a significant part of the revenue of the bank. You are supposed to audit them. Okay, you are supposed to verify the calculation. You are supposed to check the controls on their calculation. You are supposed to look at the audit tests which are supposed to be there. Now, what do I do with them? Take the example, this example. Now, I need to check the controls. These are all manual. This could be IT controls. Now, this is very important to understand the controls. If you go to the client, they will just say all entries are auto-generated, means that are completely controlled. The truth can be far from that. Auto entries can be manipulated, And then there could be issues of those auto-generated entries. Auto entries could also be manipulated with changing the program, changing the master data, and all those stuff. Okay, so these are all could be IT controls. This could be manual controls. These need to be tested. We have a specific requirement, expertise in our IT, checking the IT control, the institute conducting courses. Okay, they need to be, we need to involve those IT experts, okay, to test those controls. But at the same time, it is for the responsibility of the audit team to identify the entire system to find out where is actually the real control is. Is it the IT control or it is a manual control? Very often we find the process is being taken as a control rather than control itself. Now, suppose if there is a control to vet whether the interests have been calculated correctly by running something else, that becomes a control. You need to test whether the controls are working. Okay, it is generally could be automated or it could be even manual in certain areas. Okay, for instance, interest on loans could be manual if it is significantly involved. So we need to ensure those controls are being tested. For it, we need a good knowledge of technology to document the system in detail and identifying where are the control points. Okay, now this has become it has become much more important because you're actually reporting on the internal controls these days in respect of all the major companies. Okay, now how can you report on the internal controls without looking at the IT controls, without understanding the IT system? So this use of technology, understanding the technology, and most of the time, IT technology can be tested by the IT tools also. Okay, so it is important. This has been there for quite some time. Many of the auditors are familiar with this testing, the controls, IT controls and all. Now, what is happening is something different. The technology is being used as a tool to enhance the audit scope. Let me tell you, these are not there in the auditing standards. There's a lot of efforts being put in, a lot of investment being done internationally by big firms and others. I can tell you this has changed, it is going to change the audit phenomenally. Now, what are the tools which are being used? Is basically you use a tool to identify exceptions in a population. Okay, so that instead of doing various tests, okay, for instance, suppose your interest rate is between say 7 to 11. So you actually run a tool which will pick up all the interest rate below 7 or all the interest rate above 7 and look at them. Okay, that is one. I won't believe the analytics. I can tell you analytics can replace an audit in various aspects of audit. Now, classic example as I was taking is interest calculation. Believe me, through analytics, through tools of analytics, you can actually test the interest rates on a substantive basis, not test check. You can test the total population of the interest which are charged in a loan, okay, various types of loans, okay, or various types of deposits. You need a very sophisticated analytics tool, and you need permission to run those analytics tools with the client data, which is a challenge, which many of them are facing. But I can tell you the results are phenomenal. You have so much of comfort that you have tested them, but there is a catch. Don't put it as part of your audit procedures. Tomorrow, people will tell everybody should do this analytics, which is being evolving. This is being now evolving. But analytics could be used, which are being used to test, which is segregate the segment of population in a very nice way. For instance, segmentation is supposed to enhance the quality of your sampling. So you can use analytics to do segmentation of the population and do the testing. For instance, you may have, there are issues. For instance, if there are some revenues booked and a sales taken place on a holiday, okay, test those them, because normally it's supposed to, revenue is supposed to be booked. Okay, entries by journal entries, okay, where sales have been booked, not in the normal course. You can pick up the analytics, pick up the tools, pick up those data and analyze them. Okay, like that, there is a lot of tools which are being evolved over a period where the audit could become more effective. Okay, these are not there in the auditing standards, but these are the, I would say, a modern way of doing the audit. And this is going to change, is already changing the manner in which the audit is being done. I can tell you the auditors also add a lot of value to everyone, the clients, the regulators and everything. I can tell you an example. Personally, you won't believe, I have actually gone and done all the deviation of KYC norms in a particular client through analytic tools. And I have given it in the part of a long form report. It's not part of my duty. I have given it to the audit committee, and I have, there are various things which you have done, discussed, and they were very happy because they couldn't do it. They could never find out these exceptions because it's a voluminous exercise, but we could find out we could find out those exceptions for the company to rectify them. They were very happy. Everybody is happy. Okay, so these are not, it's all value additions. These are all expensive. We need additional time. We need additional fees to be more effective. Okay, so it's very important we start using those analytics tools, and there are greater chances of fraud being picked up by picking up exceptions and doing a substantive test which is backed up by analytics rather than our normal way of sampling and doing the testing. I can tell you it will be more effective. Okay. Now, the other things of IT documentation is technology is IT documentation. The documentation is seamless. You can store the data. You can exchange the data across, because now we have got working offline, you're working at home. Okay, so much, everything is in the system. These things are possible if you use IT documentation. Okay, it could be more effective to plan and perform the review sitting at not at the physical location, off location. All these things are possible by using technology. Well, this needs investment. Well, over a period, there will be a lot of things, general tools will be coming, are already coming. You can make use of them. Okay, instead of investing, it could be cheaper. Okay, it will be done. Now, well-planned audits are being done by using sophisticated tools with little audit trials. Okay, now this is a danger. You have got a sophistication, you have got a system, you can't rely on the system, they can fiddle around with the system. Now it has become our responsibility to be ahead in our preparations. Then we need to have knowledge, we need to have the systems, we need to have the experts, okay, who can tell you what can go wrong, how can they fiddle around with it, what can be changed. Okay, so we need to be one step ahead, okay, of the persons who are doing the fraud to pick up the fraud. Okay, so because of that, this use of technology is important. This is to be as usual. Technology is the future. I've not put it. Artificial intelligence specifically is the future of various things in what we are going to do, and audit is no exception. It's already being used. Okay. Now to conclude, I will just put certain key points. There are lots of other things which are there I have not covered because of time. What I felt was key areas I have covered. Okay. Update the knowledge. Everything is changing. The business is changing. The systems are changing. The accounting and auditing standards are changing. Fortunately, due to COVID, some of them have not changed. They have passed those changes for the past 3 years, but very less changes. Okay. And there are, for instance, in banks and other things, the regulator is changing in line with IFRS. So it will become part of the accounting standards. Okay. So Indian GAAP to Ind AS is a significant jump, especially in the banks. It is going to be a significant jump. Okay. We need to be alert of regulatory requirements. At the end of the day, regulator is always at our feet. They are looking at as saying that have you, now everything is regulation, okay? Accounting standard, auditing standards. And if they have got specific regulations, for instance, banks, insurance companies, electricity companies, we need to look at their requirement, okay? Now, if there is a regulatory reports which are being issued, my suggestion to anyone who is doing an NBFC or bank audit, ensure immediately after the report is issued, that report is fully complied with before the next audit. There is nothing, no judgment involved, nothing. You just follow the report. Okay, I have done it and tell my client, boss, this is the report you have to follow. This is law. If there is anything which is there, you go and tell the regulator to change this report next time. Okay, so you can be zero tolerance in compliance with if there is a regulatory report. Okay, this should not be on tax demands. There could be interpretation of the tax law and other things where you can take position. This is talking about regulators who are doing inspection and they have found out or something. Okay, or even the tax thing, if they have got a transfer pricing assessment and there is a study, you need to take into account those points of the tax regulator. They have been built in your accounting and auditing. Okay, and then it is ensured. Do not miss any interaction with the regulators in planning stage if possible. This is true. I've seen, and I look back, whenever I have an interaction with the regulators, either as a group of auditors or sometimes personally, they've called, for instance, especially, I would say Reserve Bank of India, they have called, the inspectors have called us for sometimes it may not be a formal meeting, there could be an informal meeting, exchange of ideas, exchange of their concern, exchange of what you think with what they think, and it adds enormous value. Many times they have interacted with us in a group and they have shared with them, shared with us the overall reporting concern they have and what will be the focus area for that year's audit. It has happened in banks. Okay, it has started happening in NBFCs, in a big NBFCs they have started. Okay, it adds a lot of enormous value to our audit to focus on our risk assessment and I would say quite a bit of comfort. Okay, the next aspect is ensure independent quality review. Okay, now very often we are doing audit under pressure of time, pressure of clients, pressure of requirements or a specific interpretation the clients want to take. Okay, so as an audit team, you can be a bit, your judgments could be a bit influenced, I would say. Now, if someone who is independent of the audit team reviews picked up, they can pick up the bias. Independent quality review is a requirement of quality control standards. It is a challenge, I understand, in a smaller firms to find out who is independent of the audits, but you need to ensure as far as possible an independent quality review of the audit working papers, auditors, judgment, and who can question the audit team and who can differ with the audit team, who could be in a position to differ with the audit team, challenge them. Okay, so this reveals any bias in decision making, and this could help in ensuring that the auditors are as per standards. Okay, now compliance with auditing, accounting standard and disclosure. This I have added because I have been part of an FRRG group. And I have found out lots of times simple errors which are there in the financial statement, in disclosures. All the disclosures, especially significant one, can be picked up by just reading the financial statements. We don't look at an FRRG. The technical reviewer or the group does not look at anything else except the financial or annual report. Okay, that's all we look at it. From there, we pick up all the non-compliances. Okay, so this is very big challenge for the auditor to defend, especially the audit report. I can tell you very often the wrong reporting of the auditors, instead of qualifying, they have given an emphasis of matter. A lot of them have gone to the disciplinary committee. You could see them in the publications of the FRRG. So we need to be careful of them. We need to be careful of what is being published, which is at the end of the day, accounts and the audit report is what is available to the public. It's available to most of the stakeholders. And if there are errors in them, there's a huge risk. Okay. The last but not the least, be prudent. Okay. Prudence is no longer a concept in India's accounting. Okay. But in any case, if there is a doubt, consult. In our firm, we used to say consult. 2 minds are better than 1 mind. 3 minds are better than 1 mind. Okay. Do consultation, especially if there is a matter of judgment, is a matter of interpretation involved. Okay. So at the end of the day, prudence is important in auditing. It is an important concept in auditing. It may not be so in accounting these days, but I would say prudent. In my entire career, one of my mantra is prudence. Okay, so that's all I have to say. If there are any questions, if I can take, I could do that.
We do have two questions, sir.
Yeah.
One is, what about, I think this question was in the start of your presentation itself.
Yeah.
What about the time constraint? Audit of listed companies have to be completed according to SEBI guidelines.
Yes. See, this is a constraint. Now, there are two things aspect to it. I can tell you, I will just give an example of certain bank audit which we used to do. Okay, I've personally done bank audits in the things. You won't believe, we used to do a bank audit within 2 weeks of the closure of the bank balance sheet. Okay, with big bunches. But what we'll plan in that audit is to perform a lot of procedures before the year end. Okay, before the year end, and crunch what is to be done subsequent to the year end. We know there are challenges. So I can tell you, we used to do an effective audit. We used to find that if, for instance, key issues of a bank audit, like provision for doubtful debts, can be done even before the year end itself. You need not wait for the year end to happen. You do as a particular date, say end of February, and then update it for March, the time available. Yes, it's a big challenge. Now, why? Because of that, the code of ethics, doesn't say that in words, but the code of ethics requires you to not take up audits which you cannot perform. Suppose I have got a team and I cannot expand the team beyond thing, and I've got a limitation in respect of the audits which I can do. I should only take up the audits which I can do in that period. I cannot take up all the audits and then have a challenge in fulfilling them. Okay, so there is a code of ethics involved. Okay, now if you look at it, stiff deadlines of audit is actually being identified as a fraud risk. Okay, so you need to ensure that it's a challenge. Practically, is a big challenge in India, especially. The information flow in many of the advanced countries where there is a maturity of the accounting function, you get all the information in time, okay, and you've got enough time to complete the audit, okay, you can plan it. It's given when it is the plan. Whereas in India, there is a challenge, but you need to plan what could be done before the year end, when the information is done. If it is necessary, if it is not possible, you can tell your clients, please postpone the meeting by a few days. This is what has happened, especially now. Okay, now everything is online. Most of the times it is online. It is on record that so-and-so has given data on a particular date and you are signing on the same date. Okay, it's going to be questioned. Now, how did you check that information on the same day when you signed it? Okay, so we need to be a lot more. Okay, it is a challenge. Okay, lot planning is involved and we need to educate the clients. And at times you need to be tough with the clients. Okay, I know, for instance, bank audits, they are given 2 days time. There is no time to go and look at the branch itself, and the third day they are at your thing to do a reporting. Okay, it is a challenge. If it is an industry issue, I think as an institute, we need to tell the regulator, boss, we will not be able to do it. Please change it. Okay, so yes, this is a challenge, but it is given. Internationally, these dates are not picked up. This internationally is available. So they say, oh, internationally it's available. What's your problem? Okay, so we need to fulfill them, but you need to be careful in what is the planning you're taking, what is the staff. At the end of the day, you cannot do an audit without an effective staff planning. So if your staffing and other things do not enable you to do the audit in time, you should not take up that audits. Okay, you should restrict those audits. Okay, or take additional help or whatever it is possible without compromising our independence. Okay, it's a challenge. It is a challenge, I accept, but that is why auditing has become. I can tell you, my relatives working, people come and tell me, what the hell are you guys are doing? They are not sleeping. They are working. Just yesterday, I got a call from one of my relatives doing an article shift. She had a panic attack because he is working 20 hours a day. Okay, so it is a challenge. It has been given. This is what is the audit profession. We need to, over a period, I think that's where this technology could help you. The technology can be used effectively, okay, to do things before the year end, and then ensure that we truncate what can be done at the year, what can be done after the year end. Okay, yeah.
There's one more question,
Yeah.
but I'm not able to relate this. How do you propose to deal with Ind AS?
No, Ind AS, I don't understand the query. Ind AS has already been there for so many years now. Okay,
Yes.
there are so many
So
years which are there. Actually, Ind AS could be actually useful. Take the case of provisioning for debts. Okay, so Ind AS requires you follow expected credit loss method than incurred loss model. Okay, now if it comes, it's not a come for banks, it is already there in NBFCs. You don't need to wait for the closing balance sheet to identify what provision need to be made. You actually need to work out what is the provision needed, because it is on expected credit loss. So the expected credit loss parameters can be done before considering the year and 1 month or something like that. You work out the parameters and be ready and apply them on the various population or various segments of the population. Okay, so actually Ind AS could enable you to do an effective audit in these kind of situations. Okay, so Ind AS is already being there. There could be gaps, but we need a lot of updates. There could be interpretations involved. We are all getting educated. Okay, Ind AS has not come to the banks, but already there is a concept paper where the Reserve Bank of India guidelines will be changing in line with IFRS. Okay, they have not changed the accounting standard. I think when that becomes mandatory, Ind AS will come to the banks also. Okay, so but I can tell you the banks have been doing work for the past 1 decade and above. I have been personally involved in a lot of banks with and with the Reserve Bank of India. The effect, how do you implement and all, they are all tuned to do it. They are not doing it for various other purposes. Now, as part of G20, it can become mandatory. But I don't think there is a big challenge. We are already there. We could easily do. Okay. Yeah.
Thank you, sir. Thank you for your wonderful insights. Now I request our secretary to give a vote of thanks.
Yes. Thank you, Pramod. What a fantastic deliberation by CA Sundaresan, sir, for 2 hours, and hope the participants have assimilated the importance of the subject sir has deliberated. Thank you very much, sir.
Thank you. I have to thank you for giving opportunity.
On behalf of managing committee members of Bangalore branch of SIRC of ICAI and the members present here who have actively participated and then gained the knowledge from the expert, I thank CA Sundaresan sir for his time and efforts in deliberating on the subjects with a 360-degree view of audit. Thank you so much, sir. I also thank all the 80 and more than 80 participants who have actively been listening to the expert. Members, we need your support going forward. Thank you very much. And I, CA Manjunath Hallur, Secretary, sign off for today. And thank you once again, sir. Thank you once again, panelists. And thank you, Pramod, Vice Chairman, Bangalore branch. Thank you.
Thank you all for patiently listening. And very often auditing is a subject which is a bit dry. And I was very happy to see so many participants. Okay, and the patient listening, and I try to make it as much interesting as possible. And I'll try to the new team. All the best for the next 1 year, for a great year ahead. Thank you. Thanks a lot.
Thank you, sir. Thank you.
Thank you, sir. Thank you so much.
I can sign off now?
Yes, sir.
Yes. Yes.